Hello and welcome to another update video about Apple. Yeah, Apple has seen a rally yesterday and not necessarily an unexpected rally. So we're going to take a look at that, try to uncover what happened there and if we can expect further upside from here. There might be a setup coming. We already had a possible setup communicated in our stock service. Apple is one of these stocks that I update regularly in the stocks and S&P 500 service. If you're interested in regular updates also about Tesla, other stocks, then feel free to check out the stocks and S&P 500 service. You'll find a link in the description. First of all, it is currently preferred that a larger degree third wave topped in December last year. That's the preferred perspective. It's not fully confirmed yet, but that's my working thesis at the moment, based on the assumption that we have technically a full count to the upside. If I go to the larger time frame, you can actually see that this would be quite a substantial wave degree actually. So it would probably be quite a substantial move down because it would match this wave 2 from 2002. So it's a pretty substantial wave 4, which would be very much in line with the assumption that we're very close to a top in some of the major indices. Okay, so I have sketched out an initial ABC structure, but it would probably be like, you know, ABC, and this would be a larger A wave. Then we could get a B wave rally, and then we come down in wave C, and it can sort of subdivide further into larger ABC structures. So I would not rule out that we really have seen a substantial top on Apple. I can also not rule out maybe one more extension higher, but I believe we are very close to a long-term top here. And to really understand if we remain on track for that, we are tracking the short-term structures, especially against the last swing high there, the $200 high that was struck in December. The focus can be on lower. Now, I was tracking in the last few weeks here this ABC structure to the downside. It actually reached the target area. Let me explain what target area that is. So if we assume a wave 5 of 3 top there, and we could identify an ABC structure to the downside. It's a pretty clean ABC structure. At the A wave that bottomed in January, a B wave rally, and the C wave formed actually 5 waves. I would have liked to see the 5th wave come a little bit lower, maybe just a little bit lower, but it's technically made a lower low below the low of the 3rd wave. So the way to measure these targets, yeah, I did measure the length of the wave 1, then we go to the high of the wave 2 to calculate targets for waves 3 and 5. The 3rd wave, normally ideal target is the 1.38 extension that was reached perfectly at $168. And minimally what the 5th wave needs to do is actually a lower low below the 3rd wave low. Now, would have liked it to come down to the next fib level. It didn't do that. So that makes me introduce here the white count, but I will explain them. So the idea is that technically in the yellow count, an ABC structure could be complete. Given the context of the chart, I'm tracking that only as the A wave of a larger correction at the moment. I want to see now if we can fill in a B wave. And if it's a 3-wave move that's being filled in, that's likely going to be a B wave. For this scenario, I want to, first of all, obviously B waves can overshoot, so we always need to be aware of that. B waves can overshoot, especially if the A wave is a 3-wave move. So it's very important to understand the entire correction, ABC, could be a flat structure in which B waves can overshoot. So don't, you know, I try to explain it as simple as possible. A lot of people who see this think, okay, we are bearish. And yes, it is an overall bearish scenario, but B waves can be super aggressive. And a lot of people try to short prematurely. Now, the best Elliott wave short setup is actually if we get the first wave 1 of wave C completed. If it's clear, we see a wave 2 corrective rally, and then a stop can be set above the B wave top. Because of the nature of B waves, that they tend to overshoot and they like to overshoot. I can't advise you, but it's generally not best practice to start shorting into a B wave rally because of, you know, how far they can extend. It's just what they do. So yeah, I'm tracking here basically now an ABC structure primarily, and then we'll watch if we can see a first 5-wave move down, which would be the first wave of the C wave. That would mark the onset of wave C. Until then, due to the rally here, it's possible now that this is a B wave rally that could be quite aggressive, maybe might even stretch to the December highs. So what's the approach now? The approach is we want to see if the market can hold a higher low now in any pullback. This here might be, it's not a clean 5-wave move up yet, but it could, an A wave can be a 3-wave move anyway. If it's 5 waves, we have a decent setup for a B wave pullback to trade the C wave higher. And that might not be a bad trade given the potential that we get further upside extensions, or the B wave might even overshoot. But we haven't topped yet, clearly, so I cannot communicate a support zone for wave B. Also, it's possible, due to the fact that it was quite short, this 5th wave, that this here is a wider wave 4, and we are coming down once more in wave 5. So if it turns to the downside from here, it might just form one more low in the support region targeting 165 or 162, and then we get a B wave rally later. But overall, the main working thesis is that we have topped, and that we should, over the coming months, see further downside, quite considerable downside on Apple. The only reason, I mean, again, but don't be too bearish, because it could be a B wave rally that overshoots, so it's not easy. I don't see a clear setup right now. I think a possible long trade setup, which however would be, as per this count, a counter trend move, would be if we see a corrective small B wave pullback to trade the wave C. Yeah, that could also prepare you in case we get further upside extensions, maybe one more high in wave 3. But really the most reliable signal that we have started the C wave down is a first 1-2 setup to the downside, which would also be a short trade setup once we have completed wave B in yellow. So that's sort of my view about Apple. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in daily updates about the S&P 500, as well as regular updates about stocks, feel free to check out our stocks and S&P 500 service. You'll find the link in the description. Thanks a lot for watching. Bye-bye.